This is the Asia Trade. I'm Sharyn in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Asian stocks set for opening gains after fresh Wall Street records as bets that Fed rate cuts are coming soon fuel a rush into riskier corners of the market. Also ahead, Donald Trump speaks exclusively to Bloomberg at Mar-a-Lago, revealing his views on tariffs, Taiwan and the Fed. Plus, big US banks crush estimates on equity trading revenue. We'll hear from Bank of America CEO Moynihan.
Well, as markets are really weighing the political risk of the upcoming U.S. presidential election, Bloomberg had a chance to sit down with Donald Trump. And what we heard about the economy was very interesting because he called it Trumponomics, low interest rates and low taxes as well. What caught my eye really is when our colleague started that conversation with him, he actually started talking about the currency problem and how he fought back against President Xi Jinping and then former Prime Minister Shinzo Abe on their weaker Chinese yuan and Japanese yen.
Yeah, and certainly Trump is someone who believes that that economic message is going to be resonating with voters. And you think about where Biden is right now, and he's actually sort of struggling to convince people in key swing states of that track record, which again showed up in the bank earnings because we saw customers really feeling the impact of higher rates. But broadly on Wall Street, actually, it was a bit of a different story because you saw higher investment trading revenues in the latest bank earnings, institutional equities as well. Those are back. And we're going to be hearing, as we said, from the Bank of America CEO Moynihan just in a few minutes from now, Shery.
Yeah, take a look at how U.S. futures are trading at the Asia Open because, of course, we're watching also not only that mixed bag of results coming from banks and the mixed performance of those stocks, but also better than expected retail sales, not to mention, of course, constant expectations of those Fed rate cuts, sending stocks to another record high. And when I say record and another, I mean, what, the 38th already this year. So we are seeing a little bit more broadening out of the rally. So we also had the Russell 2000 again gaining ground. Treasury yields fell, the dollar a bit steady. But of course, what we're following is the Asia trade and how that's really weighing on Asian currencies. The dollar was higher earlier. Take a look at how Japan futures are setting up with the yen seeing one of the most volatile rides in the past few sessions. Of course, we saw that jump or fall by the most in more than 2 weeks. That was on an intraday basis against the greenback. And we know that we have seen that hints of intervention with Japan having likely stepped into the currency market, spending about $22 billion on Thursday to support the yen. Then we're seeing around $13 billion on Friday, according to some of the data that we've been able to analyze. And we continue to watch, of course, the Chinese yuan as well, Bell, given that we also heard from Trump's running mate, J.D. Vance, in one of his sit-downs talking about how China was the biggest threat to America.
Yeah, a very well-known China hawk. And as we were discussing, traders are continuing to raise their bets on a second Trump presidency. And as we said, Bloomberg Businessweek spoke exclusively with the Republican candidate at Mar-a-Lago. For more, let's bring in Bloomberg's political news director, Jody Schneider. And Jody, it seems really that the key theme running through this piece was Trump's vision on the economy and this so-called Trumponomics.
That's right. Trumponomics does seem to be a theme for the former president as he contemplates what he would do if he were to win the White House in November, to win the White House again in November. He wants very much to see those rates lowered, saying that that's the way that ordinary people are going to feel better about the economy, that they're going to feel that they're keeping more of their money. Lower rates and lower taxes. Now, of course, a lot of the lowering of taxes won't affect those, as his team is starting to call them, forgotten Americans, more people who are more working class, who his team and J.D. Vance are making the point that they are the people that need to be reached. They are the ones who are not sharing in the prosperity that they're saying that the Biden team, the Biden-Harris team, have allowed to go to the more elites. This is the argument they are trying to make. How they will bring those rates down, how they will share that prosperity is a real question, especially with high China tariffs, which we know the former president has supports, in some cases as much as 60% or more tariffs on China products, depending on industry, and those that would certainly have some inflationary effects, though the former president wants to make the case that that would be outweighed by other kinds of economic benefits.
Yeah, we got those hints around geopolitics, around foreign policy, especially around his trade policies. What about some more geopolitical issues, such as around Russia, around some of his more isolationist impulses?
Yeah, so the former president, makes no excuse that the spending on Ukraine has not worked, that this has not been something that he has championed. And I think we will hear more about all of this when he takes to the convention floor on Thursday, when he makes his convention speech. Tomorrow night, we will hear from J.D. Vance, who is certainly we are quite certain, going to make these same arguments, not only around the economy, but around what they're calling these forgotten Americans.
What about, Jody, his views on Taiwan? Because that really stood out, this question over whether that commitment to defend the island would be lasting into the future.
Yeah, and that's a real question. He doesn't like the way that the Democrats have dealt with Taiwan. He makes that clear. But it was somewhat unclear how he might deal with that in the future if that were to happen. And clearly he wants a tough on China, tough on the mainland posture. And that has come through very clearly, both in this interview and in the other, in certainly his speeches. And I expect, again, we will hear more about that on Thursday night when he takes to the convention floor for his speech.
Bloomberg's political news director, Jody Schneider, there joining us from Milwaukee. And of course, economists have been watching that very closely, the markets as well, given President Trump's former comments when it comes to fiscal policy and taxes. Our next guest sees better disinflationary progress, giving global central banks more conviction to cut rates earlier and faster. Joining us now in the Tokyo studio is David Chao, global market strategist for Asia Pacific at Invesco. David, great to have you in the Tokyo studio.
Thank you for having me.
So we have been talking about these rate cuts coming for quite some time. But then we get the rhetoric coming from President Trump, and he's gaining momentum in the U.S. presidential race. Is that a concern for next year? Will this year not deter the Fed to cut?
Well, I think that the Fed tries to be apolitical in a way, and there's been talk that the Fed should or should not be cutting rates in front of the presidential election. We know that President Trump thinks that rates are way too high right now. He's been advocating for a low interest rate environment. I still think that it's possible that the Fed is likely to cut this quarter because the disinflation environment continues to take hold in the U.S.
As early as September, as you guess.
Yes.
And we have been pricing that in. So equity valuations now shooting through the roof. I mean, I said earlier, S&P 500, another record high. I was like, how many records can we see on the S&P 500 at this point?
I think that the S&P still has a little more ways to go. I think that that'll be boosted either by rate cuts later this year or perhaps a Trump presidency. I think that markets think that Trump will be better for U.S. corporates and corporate earnings. So I think that there could be a bit of a leg up here. But at the same time, we are seeing pretty frothy valuations, and that's why we like emerging market equities more at this point.
Yeah, tell us a little bit about those calls, because we already saw the rotation within the U.S. markets for smaller caps. Are you rotating just outside of the U.S. altogether at this point?
Sure. So the narrative is that the U.S. dollar is going to weaken, especially with rate cuts coming. That should pivot capital from the U.S. dollar to other emerging market currencies looking for higher yields. Emerging market equities are also more cyclical in nature, so they should benefit as the global economy shifts from this kind of below trend growth towards a recovery trend.
I mean, I know that we keep saying the U.S. dollar will weaken from now on, especially if those rate cuts come. But at the same time, when you throw that wild card, which is the Trump presidency, we actually saw the dollar strengthen. How can you really calculate what happens in 2025?
Sure. Well, I wouldn't say that Trump is a shoo-in for presidency next year. A lot can happen from now until November.
I know, in an election cycle,
and I think that the recent events that people say are, could give him a big boost. I think that people's memories are quite short. And so we also don't know who the final candidate for the Democrats is going to be. But I would say that there could be a near-term trade. The dollar could strengthen because, based on some of the proposals that Trump has been propagating. But at the same time, I think that the U.S. dollar is very expensive. And with rate cuts coming, I think that we'll get 2 this year, perhaps more successive ones coming next year. That should weaken the dollar.
Just picking up then on Trump trades, we've got a question of the day actually taking a look at which ones make most sense. Are there any that are standing out to you in particular? For instance, Bitcoin we've seen rising off the back. He's seen as someone being a bit more pro-crypto, but other assets as well in focus, the dollar, gold, anything standing out to you?
Sure, on the top of my mind, I would say U.S. dollar, Bitcoin, because Trump is more supportive of cryptocurrencies, gold, and even growth stocks because he's been advocating for much lower interest rates. Growth stocks benefit from that. On the other side of the coin, I would be watching the weakness of the Japanese yen at these levels, and also Chinese exports. These are 2 low-hanging fruits that I think the Trump presidency 2.0 that they would go after.
Chinese exports, and yes, we have seen really that dependency on that export-led economy to drive China's growth. What are you expecting out of the third plenum this week in terms of policy direction?
I don't have huge expectations that we're going to see anything that's going to be market moving, because we have to remember that this is more of a medium to longer term planning conference for the economy. If we're expecting any kind of more near term macro related support, that should come at the end of the month at the Politburo meeting. But what I look to for this plenum is tax reforms, the hukou reform, local government debt assistance, so kind of more medium-term economic planning.
And which sectors in particular in China are standing out to you then?
Well, I continue to like the tech sector in China because we haven't seen such strong industrial policy to support growth in tech sectors in China. We know that China is facing demographic challenges, and the one way that it can grow the economy is through productivity gains. And that will come from things like AI and cloud computing, robotics. And so I think that the government is really pushing those sectors. And so I think that the Investment 101 in China is always invested in sectors that receive policy support.
All of those issues that you mentioned about China, demographic issues, productivity, completely reflected here in what's happening in Japan. Do you see a turning point in this economy?
Well, I think that what is happening in Japan is that Abenomics is starting to work. And so we're starting to exit decades of deflationary pressures in Japan. I think the big crux for the Japanese recovery is whether the domestic household consumption is going to finally pick up. That hasn't so far. So I think that for the next leg up for Japanese equities, it would really have to see more strong domestic consumption behavior.
Yeah, we'll be watching those household spending numbers very soon as well. David Chao, Global Market Strategist for Asia Pacific at Invesco. Great to have you in the Tokyo studio. Coming up on the Asia Trade, we'll discuss the politics and the market positioning around the U.S. presidential campaign as the Republican convention continues. Plus, an exclusive conversation with Japan's digital transformation minister Taro and a one-on-one with Nikon President Muneaki Tokunari as well. This is Bloomberg.
Bank of America says it's putting more money and balance sheet resources behind its trading business. That's after it notched its best second quarter ever for stock trading. CEO Brian Moynihan told us more about how they plan to keep the momentum going.
We continue to invest along 3 dimensions. Technology, Jim DeMar and the team run it, and they've done a great job. And so 5-7 years ago, we made the decision to give them more capabilities. Technology, the balance sheet that they can use to help their customers achieve their goals, and talent. And so Jimmy across the board continues to increase. And so we feel good about it. He made $1.4 billion after tax this quarter, which is a very strong earnings quarter. But what's happening is you're seeing back-to-back $1 billion plus quarters. Where it used to be $1 billion plus and dropped to 500 when the market slowed down. You're seeing much more stability. The break-even point in the business is on a relative basis much lower. The best second quarter they've had since, I think, 2012 or something like that, which a lot of that was just when assets were marked up and came back through the system at profit. They've done a great job. And you know, Tom Montag, 6-7 years ago, started this. Jimmy took it over, has done a spectacular job of implementing it, and we feel confident. We'll keep giving them more RWA, risk-weighted assets, balance sheet, capital, and investment in technology, because that's obviously very expensive business to run from a day-to-day basis.
Brian, I know you want to grow all the business of Bank of America, but do you have a strategy about the balance between what I would think of as a traditional bank lending interest receipts as opposed to the fee side, whether it's investment banking or asset management? Are you rebalancing the bank?
Well, this quarter it happened to be half the earnings were from people, half the earnings from institutions. Out of the $25 billion of revenue, 14 was spread revenue, and 11 was, round numbers, was fee revenue. Because the market dictates a lot of the fee revenues, we could do it. But if you think about it from the businesses, in the consumer business, we made a decided decision to lower fee burdens on customers, and the trade-off for that was long-term customer favorability, running 88% across all the platform engagement places. The brand favorability in the 70%, up 20 points over the last 10 years. So we made a decision, lower the fee burden, but get it paid back in transactional accounts. Those are zero interest deposits. That's worked wonderfully. So we grow 1 million accounts a year. They start at $2,000 or $3,000. They mature to $7,000 to $10,000. It's all zero interest rate money. It's very strong, and that's, if it's a young kid, it's a customer of the future, and that's what we're doing. So that balance in fees there. In wealth management, it's all going to be about fee-driven. But the incremental growth, 7% increase in fees year over year, that's what we're driving there. Jimmy has a mix in the trading business, and then the commercial business is actually balanced. Investment banking fees, which everybody talks about, $1.6 billion, but the whole revenue in the business dominated by lending and deposits for corporate customers.
That was the Bank of America CEO Brian Moynihan speaking with Bloomberg's David Weston. And Shery, it was pretty good numbers really across the board, and we saw that reflected in the KWB Banks Index, for instance, overnight. Up more than 3%. I mean, we haven't seen that sort of level in more than a year. It just tells us the sort of levels of optimism where Wall Street sort of managed to beat expectations in some key areas. So we saw Bank of America there, of course, giving that forecast for net interest income that exceeded estimates. But Morgan Stanley was another one, for instance, as well, saying that institutional equities, those are back, and we saw beats on those across the board as well. So some pretty bright spots really out of the numbers overall.
Yeah, so it was really interesting when we actually saw Morgan Stanley under pressure for quite some time in the session, right? Because it was really good when it came to the equities trading business, but Morgan Stanley had this caveat that their wealth business didn't really do that well, and they fell short of expectations on that front. So the chief financial officer talking about how other businesses are actually doing pretty well. We're talking about improvements in the firm's money management business, for example, is something that she's pointing to. And of course, we are continuing to watch the change in leadership starting next year with Ted Pick as the head of Morgan Stanley after James Gorman as well. You can get a roundup of all of these big bank earnings and more on today's top stories on the terminal. Subscribers go to Davy Go. It's also available on mobile in the Bloomberg Anywhere app. This is Bloomberg.
If economic conditions continue to evolve in this favorable manner with more rapid disinflation, as has been evidenced in the inflation data from the past 3 months, and if employment continues to soften but remains resilient, as has been seen in the last few jobs reports, I anticipate it will be appropriate to begin easing monetary policy later this year.
Fed Governor Adriana Kugler there. And it's time now for morning calls ahead of the Asia trade because markets are shifting their focus to the Fed's policy moves now that the so-called Trump trade has set in. Traders are piling into bets in the Treasury's futures and options markets for earlier, deeper interest rate cuts. Open interest in the Fed funds futures market, or the amount of new positions held by traders, has soared in the October contract since the middle of last week. Meanwhile, the International Monetary Fund is flagging a potential risk to global growth from interest rates staying higher for even longer as inflation in many major economies cools slower than expected. Despite the warnings, the IMF sees the global economy still poised for a soft landing. In its latest World Economic Outlook, the fund raised its outlooks for China and India, which will account for nearly half of global growth, and predicted the euro area is also poised to pick up, Bell.
And Shery, the latest from the corporate front, Elon Musk says he will relocate the headquarters for X and SpaceX from California to Texas. He made the announcement on X after expressing frustration over California's new law targeted, or related rather, to transgender children in public schools. Earlier this week, Musk endorsed Donald Trump in the upcoming US election and pledged tens of millions of dollars to his campaign every month. Exiled Chinese tycoon Guo Wangui has been convicted in the US of duping investors out of $1 billion to fund his luxury lifestyle. Also known as Mars Guo, he was convicted of fraud and racketeering conspiracy. Guo gained notoriety for his crusade against China's Communist Party, attracting allies including Donald Trump associate Steve Bannon. BHP says it shipped over 69 million tons of iron ore in the second quarter. That's in line with its annual production guidance and takes its full-year output to nearly 260 million tons. The world's largest miner says demand for the key steelmaking material remains subdued in China due to its troubled property sector. Sources say Hong Kong-based hedge fund Siganti Capital Management has returned over 90% of its client capital as the firm and its founder face insider dealing allegations. Siganti had $4.7 billion in assets under management at the end of May. Founder Simon Sadler and ex-trader Daniel LaRocca have been accused of insider dealing over a block trade in 2017, Shery.
Bell, take a look at how U.S. futures are trading at the moment. A little bit of a muted picture, especially after that record high that we saw on Wall Street, with the S&P 500 gaining ground for a 38th record high. We have expectations of those Fed rate cuts, but also we got better than expected retail sales numbers, which sort of show the strength of the U.S. economy without really putting in danger the fact that we will get to those rate cuts eventually. A lot of rotation throughout the Wall Street session. We saw the Russell 2000 gaining ground again. It's now seeing its biggest 5-day run since April of 2020. Of course, markets are also digesting earnings results. It was a mixed bag of earnings for most banks, but really it was the equities trading side of Wall Street that saw that biggest jump, an 18% jump in combined revenue, helping clients really bet on those stocks trades. Treasury yields a little bit under pressure. The dollar was pretty steady. We saw a little bit of gains after the stronger than expected retail sales numbers. We'll be watching the other side of the trade as the Japanese yen holds steady as well. It fell the most in more than 2 weeks in the intraday session overnight. Right now, holding steady. This is Bloomberg.
Well, it's a big week for U.S. politics, as we know that Republican National Convention still underway in Milwaukee. Donald Trump now officially nominated to be the presidential nominee. You've got him also picking his running mate, J.D. Vance. Really a lot for us to be tracking as we continue to also monitor the odds of who is likely to win at the ballot box come November. And Donald Trump really seems to be still riding high. He came out on top in the debate. He's picking up endorsements, donations. He survived the felony charges, even an assassination attempt. Let's get more on this now with Sharyn O'Halloran, Columbia University professor of political economy and international and public affairs. And Sharyn, I'm interested for your views here, because Donald Trump is someone who's been called Teflon Don, Teflon Trump for several years now. But is there anything that can bring him unstuck over the coming weeks, or does that sense of him riding high continue to persist?
So the political economy models that we've usually used to predict these types of elections, it would say that Biden should actually win. You have the stock market rising to new heights. You have the economy doing well. Inflation is coming down. Unemployment is still low. And you would think then, for all intensive purposes, that it should be Biden's election, or at least it's Biden's election to lose. A lot of particulars now are coming around, mostly around personality and the ability to represent the party. And in that case, right now, it looks like Trump in the popularity polls is doing much better. So from a political economy stance, it should be Biden, but what we're seeing in the polls right now, it looks like Trump.
Yeah, and indeed, we've actually got a terminal chart there that we're showing, looking at odds from Predicted, but Trump's looking at around a 67% chance, and that's just up from 60% on Friday. So, again, back to that invincibility point, if this is a personality election or a personality contest, again, does that continue to dominate as we approach November?
Right now, it looks like it is, but I think these are particular situations, and we're still very far away from the election. And most people don't decide until very close to the election, a couple of weeks out. So I don't think we should just take everything for granted that Trump will win. There's a lot of things that people are going to be thinking about. So the economic outlook under a Trump and a Biden presidency would be very different of who the winners and losers are. Trump will not pursue student loan forgiveness. They will not support different types of child care credits that have really helped a lot of the middle-class families, working families in particular. Trump will focus on tax cuts and on defunding federal agencies. That's what he did in his previous administration. So those are some of the key areas, that the key differences that we should anticipate.
Headed into the U.S. elections, is that a matter of perception when it comes to the economy? Because the data shows that the economy is strong. But if Americans don't feel that way, if you have stock markets riding high, 38th record high, but most people don't own stocks and most people don't even have 401ks, will that be a constant issue for President Biden headed into the November vote?
So there's sort of two economies going on here. There's those who are really in the stock market and doing very well. High income people are doing very well. But we're still seeing that, in fact, unemployment, even though it's actually quite low, the participation rate, actually those number of people that are actually in the market and that in the labor force is actually lower than it was from pre-pandemic levels. And therefore, you still see a lot of people who are not benefiting from the good economy. The second thing that we've noticed is that with inflation, even though it's come down quite a lot to 3%, you still have consumer prices are really sticky. Moreover, we're noticing that the consumer is having still negative effects or negative perceptions about the economy, and rightly so, simply because the wage increases that they are now experiencing are not keeping up even with the 3% inflation. And so those working families in the middle class are actually hurting a lot, and they continue to. So that's some of the pushback that we're seeing against the Biden administration.
And does that mean that we'll continue to see that pushback against Beijing? I mean, in an election cycle, the best thing to have is a boogeyman. And it seems that whether it's coming from former President Trump or President Biden, having China as the enemy could be a uniting force.
It is. Unfortunately for Biden, it's also Trump's united force. So they both have had high tariffs against China. They both have seen China as the enemy for different reasons. Biden has focused on the security issues and supporting Russia. Trump really focused on the economic issues and the unfair trade practices. Both have retained high tariffs, and they will continue to do so. We're seeing that that's going to also have an implications in slowing down the economy, probably the U.S. economy to some extent, especially on consumer goods. But it will also increase inflation somewhat. Again, especially focusing on consumer goods. So that's where you're going to see most of the push.
There is that bipartisan support, yes, to be hawkish on China. But what has become clear is that there's vast differences when it comes to other matters. The likes of the war in Ukraine, for instance, really stands out, and funding support going there. We have some exclusive interviews with Donald Trump at Mar-a-Lago a few weeks back, but still he was talking about his view on Taiwan, and perhaps that support wouldn't be guaranteed. He views the Middle East quite differently as well. Do any of these differences in foreign policy stand out at all, do you think, to voters?
Definitely the relationships with Russia, definitely the positions, well, they had the positions on who he will see as their allies. Europe is very worried about the commitment to maintaining a free Europe and supporting the Ukrainian war under a Trump administration. Biden has completely committed to NATO and completely committed to Europe and a free Europe. So there's a lot of concern around that. I think those are issues that people are not thinking about right now, and they're not, and while they're in the background, they're not taking front and center. Right now, this has become a personality and a pocketbook voting presidential election, and those seem to be the factors that are influencing people and their opinions.
Very different when it comes to issues of immigration and the border, right? What does closing the border mean for the U.S. economy?
Well, Biden has actually maintained the border walls, not the same policies, but they've both had fairly restrictive immigration policies so far. Obviously, Biden has also sought to negotiate the settlement of immigrants or refugees.
Right. That was Sharyn O'Halloran. We just lost her feed. That was Professor of Political Economy and International and Public Affairs at Columbia University. And of course, Belle, we were talking about the implications of a Trump or Biden presidency and what that means for the U.S. economy, especially when it comes to policies around immigration, around the labor force, and of course, about what happens to China. Really interesting when it comes to the running mate of Donald Trump. J.D. Vance gave one of his first interviews to the news organizations. And what he talked about was that China was the biggest threat to America. What's interesting is that when it comes to that pushback against Beijing, Belle, it doesn't seem that there's much of a difference when it comes to President Biden or President Trump. That difference might just happen to be in the way that they go about doing it.
Yeah, it's really interesting because, as we were saying there, if there's one thing it seems that Trump and Biden can agree on, it really does come down to being aggressive toward China. And we know as well that's something that can appeal to voters. But in terms of the actual implications and how that's carried out, something else that really stood out to me in that exclusive interview we had with Donald Trump at Mar-a-Lago was his views on TikTok, because we know that the Biden administration has pushed for the divestment. Donald Trump, though, is saying that perhaps TikTok could stay in the US, given you've still got to have those competition. He's more pushy on big tech and having greater competition. Is that a rationale for keeping TikTok? Not least as well, we know Donald Trump is someone who's also becoming quite popular on that platform.
It's really interesting to sort of understand where he sees competition, where he sees problems with the global economy, because when our colleagues asked him the first question in that interview about global competition and innovation, he went directly to what he called currency problems. So he talked about fighting very hard, not only President Xi Jinping, but also then Prime Minister Shinzo Abe when it comes to the weaker Chinese yuan, the weaker Japanese yen, and how that was helping these countries' manufacturing sector and not not the United States. So he keeps thinking that we're having this issue when it comes to helping American manufacturing, and that's stemming from the currency trades with the weakness of the U.S. dollar or the strength of the U.S. dollar. So that will be an interesting thing to see as this election plays out and what the implications are for the markets. We saw that after the shooting of Donald Trump, for example, we had the Mexican peso plunging because we have seen that very harsh and hostile rhetoric towards Mexico coming from President Donald Trump. But in actuality, when he was president, we actually saw the Mexican peso gain ground.
Yeah, and actually just on that, thinking around currencies, because cryptocurrencies have been really moving off the back of his views as well. It is, as you said, that focus on bringing business back to America and dominating these key sectors. And Donald Trump is someone who's criticised Bitcoin as being a scam in the past, a so-called disaster waiting to happen. He seems to have really changed his tune here and it's become a lot more pro-crypto. He's even accepting donations in Bitcoin now for his campaign. And as I said, we've seen that market reaction because crypto prices have been climbing higher. Could this be the next impetus for the rally? But we can leave it there. You can watch us live and see our past interviews as well on interactive TV function TV Go. There you can dive into any of the securities or Bloomberg functions we talk about, plus become part of the conversation by sending us instant messages during our shows. That's for Bloomberg subscribers only. You can check it out at TV Go. Well, with China's third plenum underway, the country's leaders are behind closed doors figuring out how to revive a stumbling economy. The energy transition will be front of mind, including Beijing's strategy on focusing on the so-called new three. That's solar, EVs and batteries. Bloomberg Economics reckons they'll account for almost a quarter of GDP within a couple of years. Reviving the economy is also crucial to China hitting its energy transmission targets, with power grids around the world under stress from extreme weather and climate change. Bloomberg NEF data shows China faces the steepest spending requirements through 2030 if it's to meet its net zero goals. Let's bring in our energy and commodities reporter Dan Murtaugh in Beijing. And Dan, it was a really great piece and really great investigations you did as well, because you had the chance to visit that solar manufacturer for the story, GCL. Talk to us about how their technology breakthroughs really highlight to us how China is not copying anymore. It's actually leading in these key sectors.
Yeah, Belle, that's a great point. So GCL produces a material called polysilicon, which is the key material in solar panels. It's this ultra semiconductive thing that allows the sunlight to bounce off of it, generate electricity through electrons getting excited, and that eventually powers our grids. Now, for decades, the process to make polysilicon has used tons of energy and really, really like nasty chemicals and acids. But GCL sort of slowly chipped away at refining this technology known as a fluidized bed reactor that allows polysilicon to be made with about 80% less electricity. And they sort of chipped away, and a couple of years ago were able to make it at a high enough purity that they could sell it out to the market. So now they are sitting here in Suzhou, China, being able to produce polysilicon cheaper than their competitors, with less of a carbon footprint than their competitors. And it's sort of emblematic of how, China has taken sort of Western technologies that were developed in labs in Japan and in the US and Europe, and been able to innovate on the process of them and just make them commercially viable. And it's not only benefiting the world and the energy transition, but it's also benefiting the Chinese economy. Suzhou was, for a long time, an economy that was dependent on coal. It was dependent on heavy industries like cement and steel, dependent on building ever more houses, and that was just sort of unsustainable growth. Whereas the Chinese government is hoping these new factories like GCL, which are bringing high-paying jobs to the region, can help push China into a sort of new phase of growth that gets it out of the middle income trap.
Yeah, tell us a little bit about how this specific company actually plays into the broader Chinese strategy, the new three.
Yeah, so GCL is one of several dozens of solar manufacturers out there, along with battery manufacturers and EV manufacturers. These are companies that the governments have referred to, as you mentioned, as the new three. They're producing cheaper and cheaper and better solar panels, batteries, electric vehicles. It's not only meeting demand here in China, which is the biggest market for all three of those materials, but they're producing enough that they can sell to the rest of the world. And now that's obviously a benefit for the energy transition, but as everybody knows, it's also sort of undermining domestic industries along these fronts in other countries, and that's upsetting governments from the US, from India, from Europe, who also want to see a little bit of economic gain as they're pitching the energy transition to their population.
Yeah, you talked about some of the other countries and these industries. So tell us a little bit about how some of those challenges could manifest if we have more geopolitical tensions around these technologies.
Yeah. The big problem is in cost. Right now, the cheapest place to make any of these goods is in China. You can buy a really good EV here for about $10,000 US. Solar panels cost about 10 cents a watt here. They cost almost triple that in America. And so, lower cost allows for energy transitions to happen on a sort of market-based basis. So if you have cheap solar panels, then your power bill is high. You'll want to buy a solar panel that'll increase the speed and the deployment of these technologies, and that will increase the speed of decarbonization. The problem is, if you want to protect your industries, you can only do it by keeping the prices high. I mean, that's what's happening in the US right now, and that can only slow down the energy transition in those places. Now, politicians can argue about what the priorities should be and if they need a more holistic transition that includes jobs for their people. But the bottom line is, if you're just looking at wanting to decarbonize as fast as possible, increasing costs is going the opposite way.
Yeah, Dan, to that point, as much as countries might not like China's dominance in these sectors, they also need it in terms of meeting their emissions targets. So how does that sort of play into it as well? And we were discussing China facing this power spending bill that's really climbing. Yeah,
China has domestic issues of its own. They put in so many solar panels and so many wind turbines over the last couple of years that it's starting to strain on their grids. You're seeing a very small amount of solar and wind power start to be curtailed. It's small, but it's growing. And so they need to spend, hundreds of billions, if not trillions of dollars, upgrading their grid, building energy storage systems, building new power lines to shift these green electrons, both across space and across time, so that they can be used and reduce the amount of coal that needs to be burned here. Now that's starting to happen, and we're starting to see that in China emissions might be going down right now, and there's a very good case to be made that they may have already peaked several years before the 2030 deadline that they set for themselves. But the transmission bottlenecks are showing that there's still a lot of work ahead. When you look at other countries, this is a good problem that China has. For a lot of other countries, it's just getting to this problem of deploying enough renewables so that you have to get to the bottleneck. And that's, again, where the cost comes in. And so if you are in the US or you're in India right now, where they've just put in some tariffs on solar modules, it's going to be a little bit more expensive than it would have been without those tariffs. That doesn't mean it's impossible to get to a good, just energy transition, but it is going to take a little bit longer.
All right, Dan Marta, great to get your insights. Energy and commodities reporter at Bloomberg. We have more ahead on the Asia Trade. Take a look at the futures trading at the moment, because we are seeing a little bit of a mixed picture right there. Muted when it comes to U.S. futures. Of course, we saw the S&P 500 hitting another record high. Bets on Fed rate cuts coming, better than expected retail sales numbers. Also, of course, we had those bank earnings to digest. Equities traders across Wall Street really seeing a good earnings season. 18% jump in combined revenue, helping those clients bet on stocks. And we're seeing a little bit of broadening out when it comes to the U.S. equity rally. We had the Russell 2000 posting its biggest 5-day run since April of 2020. We'll see if that optimism translates into the Asian session. We have Nikkei futures already higher by 0.6%. And remember, the ASX 200 is also around those record highs for the index. What we'll be watching is what's happening to the Japanese yen. A lot of volatility in the past few sessions. Overnight, we saw it fall against the U.S. dollar to an intraday 2-week low against the greenback. We're getting some more hints on what happened when it comes to authorities intervening in the markets. Bell, of course, we had seen data suggesting maybe $22 billion spurge on Thursday, then followed by a $13 billion spurge on Friday as well. So we'll continue to watch the fluctuations in the Japanese currency.
Yeah, and overnight really led by what happened in the US with retail sales, excluding autos, but rising by the most in 3 months. So it tells us that, yes, it's just one data point, but it doesn't really further necessitate that need for Fed rate cuts. So we did see the greenback rising. It paired most of those gains into the close. But that is what you're seeing here for the likes of the euro, the offshore yuan as well, holding fairly steady at this point in the session. The offshore yuan likely to stay fairly steady over the coming week, given we've got that third plenum in China underway. It's where we get the policy direction from Chinese officials for the next several years. As we were just discussing there with Dan Murtaugh, it's really that focus on those new economy drivers in China. You've got EVs, solar and batteries, and that could make up a quarter of Chinese GDP just in the next few years. The euro, of course, we're looking ahead to the ECB rate decision as well. But that is it for FX. Let's also take a look at what's coming up in the next hour, because we're going to be hearing market strategy with JPMorgan Private Bank. We've also got Japan's digital transformation minister Taro joining us exclusively, and we hear from the Nikon president about the surge in demand for chip-making equipment. The market opens in Sydney, Seoul and Tokyo. And next, this is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after another record high on Wall Street, giving investors confidence to rotate to smaller caps. And political risk still high on the agenda, though, Bell, when it comes to, of course, the U.S. presidential elections. Bloomberg sitting down with Donald Trump and what he describes as Trumponomics, talking about low interest rates and taxes.
Yeah, Trump is certainly betting that his vision of the economy can convince swing state voters. We are actually seeing Biden as well sort of struggling to convince those people, especially when it's sort of turning into a popularity contest as well.
It was really interesting for me to see that conversation. And the first question about global innovation and competitiveness, President Trump really talking about the currency problem and how he fought hard. President Xi Jinping and Japanese Prime Minister Shinzo Abe back then. Take a look at the Japanese yen, because we have seen a very few volatile sessions for the currency. Of course, we had those hints of potential intervention coming from last week. We have seen the yen also fall in the overnight session to an intraday low of about 2 weeks against the dollar, because we saw a little bit of a push up for the dollar with stronger than expected retail sales. That faded throughout the session. You can see the Nikkei and the topics gaining ground now, extending those gains from yesterday, second session of gains. Take a look at what the Kospi is doing right now. We didn't really do much in terms of levels in the previous session, but the Korean won lost ground for a third session on the back of some of those so-called Trump trades and the stronger U.S. dollar. Right now, we're seeing a little bit of strengthening and a rebound from that weakness, Val.
Yeah, and Shery as well, taking a look at how Aussie assets are coming online this morning, because we've been tracking the ASX 200 still holding above that 8,000 mark that it crossed for the first time ever early this week. But yesterday we did see a bit of weakness coming through after we had some production figures coming out from the likes of Rio Tinto. Today BHP is also in focus because we had its numbers out earlier. Iron ore output climbing 6% in the 3 months to the end of June. You are seeing BHP just fraction under pressure here. So that question, do miners drag down the index today like they did on Tuesday? What else we're tracking in the session is the moves that we have in bond yields. Cash treasuries just coming up, and we just saw yesterday treasuries really rallying across the curve. The 10-year yield, for instance, down 7 basis points, 2-year yield down by 4 as well. Not much change coming through in the dollar this morning, fairly steady so far, but it is really those predictions of Fed rate cuts and when we can expect to see some sort of policy pivot. Let's bring in our next guest, who sees the first Fed rate cut happening in September. With us now is Julia Wang, Executive Director and Global Market Strategist at JPMorgan Private Bank. And Julia, are the conditions now really set for this Fed pivot, do you think?
No, we think they are, very much set already. If you look at the two sides of the Fed mandate, on the inflation front, we're seeing broad-based cooling of inflation in the June print. We don't have the PCE, but if you look at some of the projections for what PCE could look like in June, the 3-month trend could move down very close to 2%, which is exactly the Fed target. And meanwhile, if you look at the labor market, we've been of the view for some time that we're at the inflection point where in the labor market where a lot of the normalization post-pandemic already happened. And now we're seeing the beginning of some cyclical cooling or weakness, if you will. So really historically, so if you think about these two sides of the Fed mandate, they are now in really good balance. And historically, we've seen at this type of turning point for the labor market, the Fed is usually very, very sensitive to that. And they want to get ahead of further weakening the labor market. So we do think that they are likely very ready to cut rates in September, and we do think that they will.
And we were just discussing there, or Shery was mentioning about that sort of rotation trade that's coming in. Is this the time you also want to start shifting around?
So we are, I think, a little bit on the fence about the rotation trade. I think it's a good trade maybe for the tactical-minded investor, because we do know historically speaking, cyclicals, small caps do well into a rate cut moment like this. But having said that, historically they also sell off a lot ahead of the first rate cut, and we are heading into an environment where we think that growth is cooling. The consumers, yesterday's retail sales number notwithstanding, we do think the consumers in the U.S. are broadly slowing. So you're coming in the moment where the cyclical drivers of the economy are cooling. So you're not going to get that much support from the earnings side, presumably. So you're going to really bet on the multiple expansion, and that depends on how aggressive and how many rate cuts we see, not only for this year, but really going into next year. So we do think that tactical investors can think about small caps and cyclicals, but for our horizon, we think that we prefer to think about broadening out in a different sense. Think about the technology leaders. How do those things broaden out? And if we see a pullback in some of the things that we like from a secular perspective, I think would be better buyers of that for investors of our type of horizon.
What else you've got to, of course, think about as any investor is Trump and this odd that he's re-elected in November as well. And we've been hearing from people about the so-called Trump trades that make the most sense. What stands out to you?
I think that there's a lot of fluidity and uncertainty when you think about the overall macro situation. I think it depends a lot on the policy sequencing, on the magnitude of those policy pillars that candidate Trump's talked about, and how the economy is at that point in time, and how the Fed, for example, reacts. So there's a lot of uncertainty at this point. We don't really want to get ahead of all of that. So it doesn't really change our base case for how we think about markets at the moment. We think the fundamentals like Fed, like growth trajectories, like inflation matter more for markets, and it's still a very constructive backdrop. Having said that, for investors who do want to get ahead maybe a little bit of that politics, we think thinking about where to avoid the risks in your portfolio is one way to think through that scenario. And when some of the risk we see may include, for example, a potential steepening of the curve into the longer end, particularly on the back of maybe higher longer-term inflation or more of a term premium. So that's why we prefer to, think about shorter date duration core bonds as we think about fixed income investment. But it's really more about, you can think about some cheap hedges for your equity portfolios. But we don't really expect that as a base case. It's really more about tail risk protection, if you will.
Yeah, I mean, we have seen the gold, for example, rise to record highs. But when you talk about hedges, could artificial intelligence-related things be just a part of it? Because that rally seems unstoppable at this point.
So we liked gold. I think some of the secular drivers of gold are really in play this year. When you think about the fractures in the global economy, and you think about reserve diversification from some of the EM central banks. So we think the secular trend is there. And actually, as we head into the first rate cut, we think that the dollar likely will be plateauing or even softening a little bit into next year is how we're thinking about 2025. So against that backdrop, gold could actually see another near-term positive catalyst. So we do think gold could still have a 10 to 15% upside in the next 12 months. We also like it from a longer-term perspective. I do think that it's an asset class that investors should have some to whether they're thinking about the near-term cyclical or the longer-term structural issues.
How big of a risk is the Chinese economy going into 2025, especially after the economic numbers that we saw this week?
So we think that China's economy is actually stable. I think that consumption is weak, but the manufacturing sector is doing well. So in some ways, these two things are kind of netting out from an overall growth perspective. What investors I think are concerned about is the fact that maybe some of that is due to how the headline GDP print is below expectation. It's this idea that maybe the policy put isn't necessarily there as some sign of growth weakness. Maybe the policy stimulus isn't there. And I think that's still maybe a concern for investors, given that this is a moment in time where the global headlines are all looking more negative for China, from a trade tariff perspective or from a geopolitical tension perspective. So there's not enough of a domestic policy put to really offset the global negative risks. So I think that's why we still think that there's the upside for offshore China market is still somewhat capped in the near term, and it's still a range trade market for us. So if we think about the beneficiaries of China's growth transition over the medium to long term, I think we do prefer to look at them from in Korea or in Japan, in the trade partners of China, if we do believe that industrial manufacturing sector is really going to upgrade. But I think that the market itself, the sentiment is still very weak.
So that's really how you want to look at it. If you're trying to invest in, as you say, those more micro themes, but China's new growth drivers, solar, batteries, EV, it's about trying to find the partners that they have in other markets.
Yeah, exactly. I think, China's not going to be able to upgrade its manufacturing sector on its own. I mean, they're trying to do a lot of things domestically, but still they're going to be relying on technologies, on parts and equipments. And I think a lot of North Asian economies stand to benefit from that because they still have a comparative advantage in that regard.
All right, Julia, thanks very much for your time this morning. That was Julia Wang there, Global Market Strategist at JPMorgan Private Bank. And coming up this hour, we'll hear about Japan's digital transformation. We've got the Minister, Taro joining us exclusively. And we hear from the Nikon president as well about the surge in demand for chip-making equipment. More ahead. This is Bloomberg.
You're watching the Asia Trade. As investors raise their bets on a second Trump presidency, Bloomberg Businessweek spoke exclusively with a Republican candidate at Mar-a-Lago. For more, let's bring in Bloomberg's political news director, Jody Schneider, who joins us now from Milwaukee. Jody, so we got some hints about his potential economic policy if he goes into the White House again. Is Trumponomics a thing now?
I think it is, Shery. He used that term, and in the former president's description, it means less regulation, lower taxes, and lower interest rates. That's something he said that is really hurting middle Americans. He's trying to make his case for a future economic plan if he becomes president again, not only to voters, but to Wall Street and to the markets, saying things will be easier, they will be better, but most Americans will do better under his plans. He talks about tariffs, and he has said quite a bit about tariffs in recent months, as much as 60% or more tariffs on some Chinese goods. But he claims in this article, and this has been the pitch on the campaign trail, that this would not necessarily be inflationary. It would not necessarily hurt working Americans, because this would come with some other things that would ease some of these inflationary pressures. So not a lot of details except for these broad brush areas, but he did focus a lot on this with our Businessweek colleagues in that interview at Mar-a-Lago. Of course, the president will take the stage here in Milwaukee at the Republican National Convention, giving his acceptance speech for that nomination to again be president of the United States. And he will do that Thursday night here in Milwaukee. And I'm sure we'll be hearing more on these economic themes from him then. They are a core component of his reelection bid.
What else was a key talking point, Jody, was Donald Trump's relationship with Silicon Valley. And here there was a sense that he does want to be tough on big tech and even TikTok, which has been a key sticking point between the US and China, looks like it could perhaps stay if he were re-elected.
Yeah, and this is a turnaround, Heidi. He had earlier wanted to ban TikTok. This was something in his presidential term that he had threatened, and actually then moved over to the Biden's term as well. But he says now he would keep it. He wants to be tough on China in other ways, and he doesn't think banning TikTok is the way to do this. And interesting, in regulation, while he wants to be more lenient on regulation and including things like drilling, he thinks the U.S. should drill more. He does think that some of these tech companies should have some regulation, that they have escaped effective regulation for too long.
And Jody, something that has happened just recently and post these interviews for the Businessweek piece, but has been perhaps an assassination attempt on Donald Trump being foiled, and this one coming from Iran.
That's right. We just read about that today. Of course, the president was shot at a rally in Butler, Pennsylvania on Saturday. He escaped serious harm, although someone in the crowd was killed and someone was badly injured. But he just had a wound to his ear. But that we did learn today that there had been perhaps another assassination attempt coming from Iran. And then so Secret Service protection, which was already quite stringent, has been stepped up. And here in Milwaukee, where he is set to give his acceptance speech on Thursday night, and his vice presidential nominee, J.D. Vance, will give his tomorrow night, security is extremely tight. It's very hard to get anywhere around downtown Milwaukee.
That was Bloomberg's political news director, Jody Schneider, there in Milwaukee for us. And you can read more on this big take story on Trump, on taxes, tariffs, J-Powell and more in full. That's on the terminal and as well on Bloomberg.com. Let's shift now to the Chinese president's common prosperity push because it's spreading to Hong Kong. And sources are telling Bloomberg that executives at state-backed financial firms are being asked to return some of their pay. For more, let's bring in our Chief North Asia correspondent, Stephen Engel. And Steve, this made for some pretty wild reading. I mean, we're hearing from sources that you could have even left the banks and now you're being asked to repay your bonus.
Yeah, not surprisingly, this is one of the most read stories on the Bloomberg terminal over the last 12 hours or so since it hit the wires. And obviously, this has been a concern since Xi Jinping really launched this common prosperity push back in 2021. We've already seen these kind of clawbacks, as they're called, on the mainland with banks like CICC and CITIC Securities cutting salaries, from sources as well as, from industry insiders, essentially. But it hasn't necessarily happened in Hong Kong. Hong Kong has seen job reductions and perhaps some pay not clawback, but cuts, if you will, because of the deal flows have evaporated. The stock market has not done well here in Hong Kong. The overall economy has not done well. So we've seen, because of the outflow of deals, basically the financial sector here has taken some licks. But now we're hearing from sources that banks such as China Everbright, China Huarong International have asked some of their employees, including, as you said, past employees, to pay back some of the portions of their bonuses that they've received over the last year or so. It's not a huge amount, about 10%, according to the sources, of bonuses at China Everbright for one, but it certainly sends a message. And it's unclear how many employees might be affected by this and whether it will go beyond just the executive ranks.
Yeah, you also question how much does that dent their appeal as a place to work. But
it could lead to a brain drain, further brain drain, obviously.
Yeah. Talk to us about this common prosperity push, because it is a sort of a signature policy of Xi Jinping thought, if you will. How is that likely to be reinforced, that sort of thinking at the third plenum? I
would assume that it probably is being discussed among many things over the 4 days of the ongoing plenum, but we're not getting news flow out of that, as the top government officials are sort of sequestered behind closed doors. But this is a signature piece, common prosperity, and already the anti-graft watchdog over the last, I think it was in February or thereabouts, or even before that, essentially blasted the finance sector as kind of being hedonistic and wanted to kind of rein in some of what was perceived by the party as being excesses. And we all know that Xi Jinping wants to exert more party control and party discipline over many sectors of the economy, including financial services. So again, the big question is, how much does this further limit China's financial sector, which really, let's face it, over the boom years, if you will, in China, of 4 decades of market reforms and openness in the financial services sector, how much does this potentially limit the influx of talent and also, of course, the innovation in financial services in China?
Yeah, as you say, brain drain is a key risk here. Well, that was our Chief North Asia correspondent, Stephen Engel, there, and we'll have more ahead on the Asia trade. This is Bloomberg.
If you look across the board, it's solid, growing a bit, but growing consistent with the lower growth, 2% type growth, lower inflation economy. It's not growing as fast as it was coming. The pandemic shot up, went down, and it started growing faster. Same with deposits, went up, drained down, they're stable. The activity is kind of normalizing.
Bank of America CEO Brian Moynihan speaking after its best second quarter on record for stock trading. In fact, equities traders across Wall Street's biggest banks pulled off a clean sweep of higher than expected quarterly gains with an 18% jump in combined revenue. For more, let's bring in Asia investing editor Russell Ward. And Russell, we just heard from Brian Moynihan, so should we start with Bank of America? And also a little bit of a mixed bag when it came to Morgan Stanley.
That's right, yeah. I mean, both solid results pretty much all round from Bank of America and Morgan Stanley. And that's really been fueled, as you mentioned, by the trading revenue, especially Bank of America with the equity trading and also some pickup in investment banking as well. And that's really offset some sort of softness on the net interest income side, which has been expected, with interest costs rising and squeezing margins slightly. And then on Morgan Stanley's side, they also had beats on trading and investment banking. But as you mentioned, there was some weakness on Morgan Stanley's side, which was on the wealth management. That missed expectations, and their net asset inflows were slower than expected as well. So we saw Bank of America's shares surge more than 5%. In fact, it was the biggest gain this year. But Morgan Stanley's shares only rose less than 1%, and that probably reflected the weakness on the wealth management side of things.
So, Russell, that's Morgan Stanley and Bank of America. How would you look at the earnings season for Wall Street banks in aggregate? What were the key takeaways here?
Yeah, and I think yesterday's earnings from those two banks really reflected the same trends across the board, which was really the pickup in trading. As Shery mentioned at the top of the show, the equity side of trading was exceptional, and that reflects obviously the boom on stock trading in the US, and then investment banking also picking up as well. That's been obviously in a deep slump for the past couple of years, so very positive signs there. Big gains for the banks off low bases, admittedly, and that's really again making up for the softness in net interest income. But again, the net interest income is softening, but not exactly falling off a cliff. Banks pretty much across the board maintain their forecasts for net interest income. So, even with the likelihood of Fed rate cuts down the road, it looks like banks can still make enough money from lending, and also supplement that with the boom in the trading side and the investment banking side. So it's going to be interesting seeing in the next couple of months what happens, how it plays out with the Fed rate cuts. It's looking likely there's going to be a couple this year. But, any downside from the net interest income that they might suffer from that will be made up for from the boost to the economy, obviously, from rate cuts. And then you've got the US election on top of that. There is some word that that might slow the pace of deal making, but really it's looking like a pretty solid picture for the banks going forward for the rest of the year.
All right, that was our Asia investing editor, Russell Ward, there, wrapping up the numbers from Wall Street. And let's take a look at how futures in Europe are coming online as well, because here it's very much the earnings theme that has been in play. We are seeing futures moving just fractionally higher at the start here, but actually in the intraday session on Tuesday, we saw really declines across the board. What is driving that? As we said, it's those results that are coming through, but it is that concern around what we see in the luxury sector in particular. Hugo Boss, for instance, dropped. Richemont as well pointed to some weakness coming out of the mainland economy. Rio Tinto, the London listing as well, declining. Muted Chinese demand really playing into that as well. So that's the state of play there for Euro stocks. But coming up as well, we're going to be joined by Japan's Minister for Digital Transformation. That's Taro. He joins us live in Tokyo next. This is Bloomberg. You're watching the Asia trade, and we're taking a look at a picture of Singapore here this morning because we just got some numbers that have been released. This is the non-oil domestic exports, and we are seeing actually a drop here, quite a bit steeper than had been expected here. So we've got non-oil exports down 8.7%. The estimate had been for contraction of 1.3%. And here as well, taking a look at electronics exports, those are off 9.5%. Month-on-month reading, it's a bit more of a picture of moderation because non-oil exports have declined 0.4%. The estimate had been for actually gains of 2.7%. So not really great numbers coming out of Singapore's export figures here. The Singapore dollar, little changed really, Shery.
Yeah, take a look at how Japanese assets are trading because we continue to watch, of course, those exports and the tech sector as well. But real estate and healthcare are the big winners in today's session. The Nikkei is up. The Topix is up as well. The Japanese yen holding steady at that 158 level. Of course, we've seen a lot of volatility on the Japanese yen and weakness across the board overnight, as well as we got those stronger than expected US retail sales numbers. But it seems that we're finally seeing some signs of life in the Japanese economy after decades of stagnation. And and new technologies really crucial to increasing productivity in a nation that suffers from chronic labor shortages and aging demographics. Taro is Japan's Minister for Digital Transformation and joins us exclusively now. Welcome to our brand new Tokyo studios. Great to have you.
Good morning. Thank you. Thank you for the invitation.
And I think congratulations are in order because apparently you won the war against floppy disks in government agencies.
Well, that has become the biggest news out of our digital agency this year.
Well, what are your priorities next? Faxes, perhaps?
Yeah, we definitely need to get rid of the fax machine. We are talking about digital transformation, but we have just issued a new set of the banknotes. So people are asking me if we are going to cashless or more cash.
That's been amazing, being back in Japan after a decade and being able to just use my credit card everywhere. But how does that really apply to the digital transformation in business? As I understand, the government is looking at using drones as well?
Well, Japan's depopulating, so we need to use digital technology to replace the labor. So we are seriously putting effort into drones and auto drive cars. So that's what we are trying to promote right now.
Does artificial intelligence play a part there? Because there's been concerns on both sides. Will it help when it comes to workers and helping out, as you say, that labor shortage, but also will it take over jobs?
Well, in Japan, we grew up with manga, anime, where AI-controlled robots are helping you to do the homeworks or fighting against villains coming from outer space. So AI technology is always friendly to the Japanese. And we are losing labor force. So we definitely need to use AI technology. So unlike some European countries, we are not really worried about AI stealing your job. We definitely need to incorporate AI technology for our future.
When it comes to digital services, though, we know this Japan digital deficit that the government has termed about all of these tech giants being from abroad and taking all of these fees away. Is there a way to really bring that innovation into Japanese business?
Well, that's something we seriously need to think about. We need to promote more digital startups in Japan. The startups in Japan tend to look at the Japanese market from the beginning, but we are encouraging them to go global from the beginning. So when they get some share in global market, they can look at the Japanese market. I think that's the right way to do it.
Are we seeing that turning point when it comes to the Japanese economy? As you say, digital transformation, perhaps friendlier robots, friendly AI. Is this a turning point? Because we're seeing so much interest coming from foreign businesses, but also because of the cheaper yen, we're seeing an influx of tourists. Is this a sustainable momentum for the economy?
Well, the tourism industry, the average wage is lower than the average. So we have 30 million tourists coming to Japan a year right now. And if we expand that, we're going to have bigger tourism industry where the wage is lower than average. So we wanted to get more tourists coming in, but we would like them to spend more. So we would like to target the wealthy tourists coming to Japan. And we definitely need to provide better service to them, starting from the hotels, to some package tour, not just looking at the lower cost, but the high experience, unique experience for the tourists.
I love speaking about the broader economy with you because you've worn so many hats during your career. But digital minister, foreign minister, defense minister, will Prime Minister be your next role?
Well, hopefully, sometime.
What are you thinking of right now that would make the right timing for you to run?
Well, we don't know yet. But, well, if you become Prime Minister, you can implement what you wanted to do more. So hopefully sometime in the future.
You're very popular among the broader public. Do you think you can help really garner that support for the LDP?
Well, I hope so. And as you say, we are turning our economy. It's been zero or negative interest, but now it's become positive. and the economy seems to be start moving, out of deflation to inflation.
Have you talked about running for the LDP leadership election?
I've been talking about for the last 28 years, so it's nothing new.
This one in September?
Well, we'll see.
Look, this conversation I feel is very overdue because I booked a conversation with you around the UN General Assembly when I was back in New York. It was a busy, busy time, wild times, and we had to cancel that conversation because of your schedule. Do you still keep in touch with perhaps some of the people around President Trump?
Yes, we do. Yes, I do. And we are closely monitoring situation in the United States. We don't know who's going to be the winner in November, but Japan need to be prepared for whoever wins the election. We need to do more business with the United States, not just the economy, security, others. So.
Bloomberg just had a conversation with President Trump, and it was really interesting when my colleagues asked about global competitiveness. The first thing that he talked about was the currency problem and how he fought hard against then Prime Minister Shinzo Abe. Do you think that could be a problem?
Well, the currency is a problem for Japan. The yen's too cheap, and we need to bring it back. So the way President Trump the way we are looking at, is probably the same way.
When it comes to cheap Japanese yen, it also helps in a way your tech exports, right? You're a tech powerhouse. How do you use that prowess in order to achieve your geopolitical goals?
Well, it used to be weak yen promote export out of Japan. But now so many Japanese corporations manufacturing outside of Japan. So cheap yen doesn't increase the quantity. When they send the profit back to Japan, convert it into yen, it gets bigger. But those money are reinvested in outside of Japan. So I don't think Japan welcomes cheap yen. I think we need to create a strong yen to support life in Japan.
How much has that to do with the Bank of Japan itself?
Well, the Bank of Japan need to increase interest rate, and they are still afraid of not deflation, but bring the economy down. But I think the lower interest lead to the weak yen, and that push up the price in Japan. And, the Japanese are aging. The average age of the Japanese 49. So there are so many people living on the pension, the fixed income. So stronger yen will reduce the cost for energy and food. So that's what we need to be looking at.
As a digital minister, of course, you look at technological advances for the country. Do you look at China and perhaps their ambitions in the tech industry as a concern?
Yes, it is. When we welcomed China into WTO system, we thought they would be a good player according to the rules. Well, it didn't go that way. So we really need to be paying attention to what China does domestically. And we need to be prepared to, work together if that is possible. But if they're doing something out of the rule, we need to counter their movement. So I think U.S., Japan, Europe, other G7, G20 countries need to work closely.
We're building out the AI infrastructure for the future, especially here in Japan as well. It's a lot of energy. Could nuclear power play into that?
Yes, we need to restart the nuclear power if it's confirmed the plant is safe. And then we need to increase renewable energy. We definitely need to reduce the fossil fuel, especially coal. So renewable and nuclear are the only way out.
Minister Kono, really, really happy to finally have you in the New Tokyo studio. Long overdue conversation. Taro Kono is Japan's Minister for Digital Transformation here in Tokyo. Bell.
Great interview, Shery. And of course, we're just continuing to track our markets are faring through the session as well. 40 minutes into trade for Seoul, Sydney and Tokyo. And so far, the state of play is pretty range-bound, but still moving mostly to the upside today. Of course, we track just these records that continue to come through for Wall Street. Optimism around the expectations for a Fed rate cut certainly playing into that, even as traders continue to assess the odds that Donald Trump returns to the White House. So we are seeing the Nikkei here just moving a little higher, and as well keeping an eye on what Kiwi stocks are doing. 0.5% upside. We did actually see Korean, or rather Kiwi inflation, New Zealand inflation, slowing more than expected to a 3-year low early this morning. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how some of these chip stocks are trading across Asia. Of course, we're previewing SML. It will report its second quarter results, the chip tool maker, to deliver strong bookings. Of course, it's all really about the semiconductor space, the tech space. Another stock that we're watching is Nikon. The company is best known for its cameras, but has really been shifting focus to repurpose its optical technology into growth sectors such as chip making and even space missions. Joining us now is Muneaki Tokunari, President, COO, and CFO at Nikon. Aki, great to have you with us after seeing you at CES in Vegas.
Right, Shery, thank you for inviting me, and I'm very excited to
tell us a little bit about the changes that we're seeing at Nikon, because I know Nikon, we think cameras, but you're doing something else now.
Yep, I joined Nikon 4 years ago, and I made some initiatives. For instance, we shifted the business model from the finished product centric to more to contribute to your customers, and we want to grow together with the customers. So we're providing components or parts and so forth. So Nikon inside type of business model.
And then you can call it Nikon too. We do both, I think, at the same time. But when it comes to the company, when it comes to some of those equipments and components, how important are they for the chip making industry, which right now everybody seems to be focused on, given the growth of AI?
Right. So AI is, of course, a big thing. So AI, I think, will provide or will expand the possibility of humanity, I think. So in Nikon, we utilize AI in a variety of products. For instance, we in the digital camera, our AI is help users to take the ideal photos. And also in a biological microscope, our AI is assisting to development of new drugs to treat with cancer or other intractable disease and so forth. So I think we would like to contribute our technologies.
I think you're seeing some changes in your factories and facilities, especially to repurpose towards the future. Are you making more investments there?
Right. So we decided 100 billion yen investment in order to enhance our ability to produce optics. Optics is a key for. We are using tiny the lenses for microscope, and also we are big over the certain meters, the bigger. The lenses for the satellite and so forth. So we are very proud of our technologies in optics and the precision.
You have many partnerships with the U.S. as well, including NASA. I think you were recently invited by the Vice President Harris at a dinner. Tell us a little bit about your growth in the American market.
Yeah, actually, it's not dinner, a lunch, actually.
Okay, got it.
So I missed the chance to hear the voice of the Paul Simons because I invited the lunch hosted by Mr. Blinken and Kamala Harris, your Vice President, for lunch. When Prime Minister Kishida visited in April. The thing is, I have been invited by two reasons, I think. One is we are jointly developing the new digital camera usable in the lunar surface, moon. So our Z9 digital camera is now modifying to take a picture on the moon. So we are very proud of that. NASA chose Nikon as a partner. That's the one thing. Another thing, so my next, on the table, my next is the Mr. Bill, who is the administrator of NASA. So on the left-hand side is the semiconductors mafias. So our major customer is Intel. So we are providing the lithography equipment to Intel. So we are really proud of that.
How closely are you watching the geopolitical tensions and maneuverings around the semiconductor side? role would Nikon play there?
Yeah, exactly. It's a great question. So we always have to be mindful for geopolitical issues. That is a risk, of course. But the IC chips definitely need. I mean, that would help the human beings' lives for coming digitalized society. So IC chips is key device. So our lithography equipment is key. So we are trying to expand our business within a rule. That rule, of course, includes export ban to China. So we are frequently, often consulting with the Japanese government and even the U.S. government.
When it comes to exports, because of the cheap Japanese yen, how much of your business is really in here and out there? Right. And what is it a net positive, net negative?
Right. The weak yen is positive for Nikon's performance because approximately 80% of our sales are overseas. Having said that, in a more larger perspective, the continuous depreciation of yen, despite the narrowing the interest rate gap between U.S. and Japan, may indicate some fundamental or critical change, i.e., a weakening Japanese economy itself. If that is the case, the weakening mother currency is not a good thing. I think the only way to deal with that is for Japanese companies, including Nikon, to trying to improve our corporate value. As a result, elevate the strength of Japanese economy as a whole.
When it comes to elevating your value, when could we see more solid profits, given that, of course, the investments are taking up a lot of the cost, right?
Exactly. So one of my assignment is I need to ask the patient for the investors while I'm tackling my juniors or colleagues. Please rush to make the product faster than the plan. So
the refocus will lead to long-term growth. What are you betting on right now?
We are betting on the many things. Of course, the digital camera is one thing. That we are trying to expand the customer base. Surprisingly, a younger generation tended to start shooting the camera. They are hobby.
I've seen some people.
Right, exactly. So everybody thought that the smartphone may beat the digital camera. But recently, it's not the case. Another challenge, we are trying to entering into digital manufacturing, including metal 3D printers.
All right.
So many defense and aerospace industry in the United States shows interest. So that's why we established global headquarters of that business in California for obvious reasons.
Muneaki, Tokunari, it was really good to have you in our new Tokyo studio, President, COO, and CFO at Nikon, giving us his take on the refocusing of that business. And of course, if you missed any part of this conversation, TV Go is your function. You can also watch us live. You can dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
Well, Chinese stocks have been among the world's worst performers over the past year, but they are beating major peers based on one tried and tested hedge fund strategy. Let's get more with our China correspondent Min Min Lo this morning. And Min Min, I mean, everyone wants to know, what is it?
Yeah, it's a classic long-short strategy, and according to UBS, they have seen returns of over 10% this year, and Goldman Sachs have returns of 10%, but UBS says that their China long-short strategy has returned 15% this year, and that's compared to just 7% in the US, less than 6% in Europe. And the reason for this divergence in gains is because of that very uneven two-track recovery in China. So you have these property stocks, retail stocks really struggling, but you have very clear state policies that are favoring boosting industrial capacity. So China's equity structure just lends itself to this long-short strategy. And if you take a look at the year-to-date performance so far on your screen, the top performing sector is energy, up 27%, and the worst performing is healthcare, down 27%. And a part of that is Beijing also urging these state-owned enterprises to increase, to boost shareholders' returns. So there is clear intention from policymakers to underpin those gains. And compare that to the US again, you have your top performing sector, tech, up 34%, but their worst performing sector, real estate, is also up 0.1%. So analysts are saying that China's centrally planned economy gives us a lot of visibility as to which sectors will gain from government support, because the way the policymakers map out those key initiatives like your SOE reforms really comes in multi-year plans. So we don't get that kind of visibility and certainty in other markets.
Visibility and certainty on the policy direction, but we also do see sometimes quite a heavy hand of Beijing in markets. And we have seen, for instance, restrictions around short selling. Is that going to have an impact on this type of strategy?
Yes, speaking of that, today we just had fresh lines from the Shanghai and Shenzhen stock exchanges saying that they are studying ways to implement higher fees for quant trading. And this comes after last week's announcements from the CSRC that they are increasing margin requirements for short selling. And China's largest stock lending provider has also halted stock lending operations since July 11th. So this will definitely affect the onshore high-frequency quant traders. But for offshore stock pickers that trade on fundamentals and hold those stocks for longer, they will be less affected. And you can still short the American ADRs, the Hong Kong listed stock, and bet against futures linked to Chinese equities.
All right. That was Min Lo there, Bloomberg's China correspondent. And that's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show is next. And this is Bloomberg.